So what makes a good leverage buyout target? We have to think about this question because number one, it can be part of the interview questions. And number two, at some point of time, you'll have to find target companies that are attractive and pitch it to, senior analysts, or actually, if you're the senior analyst or the owner of the company, you're going to have to make decisions on whether the target is attractive or not. And therefore, we do need a certain framework to make our investment decisions. But before thinking about leverage buyout targets, attractive leverage buyout targets, just let's think about what just makes a good investment target in general. So we're going to go over a universal corporate analysis framework. Maybe some of you have already seen this framework from other courses as well. If you have, maybe you can skip this part of the lecture. If you haven't, this is going to be very helpful for your future stock pitches, or you can use it for case interview frameworks. You can also use it if you're an equity analyst. Your initiation report is going to look exactly like this. If you're making a deck or an annual report from the investor relations, usually pitch books, IMs, they all look the same. They all look very similar. The framework itself is universal. So usually what we first see is the industry. We try to define the industry, and we try to find out how sizable the market is. So if you already have data on the market size, that's not an issue. But in many times you have to build a model and you have to figure out the market size. In consulting case interviews, maybe they can ask you market sizing. They try to see if you have the ability to calculate market size or estimate market size just using your common knowledge, which sounds easy, but if you're in a room with interviewers and if you're nervous and have a lot of going on in your head, it could be quite difficult. But anyways, market size and the market's growth potential, these two parts are one of the most important when deciding whether the target is attractive or not. So usually if the industry and the market growth potential looks attractive, usually the target more than 50% of the times the target will be attractive. And lastly, maybe you'll also have to consider the market's profitability or other market factors as well, as such as entry barriers, regulations, things like those. If you think the industry is okay, is attractive, you can move on. If you analyze the industry and if you think that the industry is just not worth it, well, you can just drop the project and just move on to other targets. But anyways, after industry, we want to look at the competition. So who are the competitors in this industry? What do you need in this industry in order to succeed? So we use the phrase KSFs and KBFs, so key success factors and key buying factors. What are they? Who are the players? And then we want to compare, each success factor or each buying factor, player to player. If we do that, we can instantly get an idea of how our target is positioned within the market as in competition. And usually the market share is the result of the comparison. So if your player is very successful in the development of KSFs or KBFs, usually they have a huge market share. It would be very unlikely if they don't. If you have seen the industry and the competition, you're almost there because you've already included your target in your analysis. And next thing you want to do, you want to see a little bit deeper about the target company. So what are the business models? What are the value chains? Who are the shareholders? How is the governance structure? Are there any were there any major M&A activities or any M&A activities that are planned? Why did the stock prices move the way they did? These kind of things specific to the company we'll have to analyze. And if you have analyzed to the company part, now you pretty much know everything you need to know about making an investment decision. The next part are the financials. So it's kind of like a result in numbers that combine industry, competition, and the company. It's not only the results, but also when you make future assumptions, as we did in our financial models, we're using our analysis performed when we're analyzing industry, competition, and company. And as a result of the future financials, we can now move on to doing the corporate valuations and get an idea whether the target company is cheap or relatively expensive. And lastly, we also have to think about the risks. So if you have a very positive opinion, you always have to explore the negative opinions and the possibilities that you might be wrong. And then you can draw your results in making the investment decision. However, all of this, as a story, it seems fine, but the problem with this is that the answer lies in the rear. So usually in most materials, we do have a summary on the front. Sometimes it's called an investment thesis. Sometimes it's called an investment highlight. Some kind of summary in the front, so you can get answers first. And this part is going to be used in stock pitches or investor presentations or something like that. So if we've understood the framework to try to find an attractive investment target, now for the leverage buyout target. So it's pretty much the same. First, we want to look at the market or industry outlook. So this is, the same with the one we've seen before. For your reference, we're gonna, explain 8 suitable target characteristics of an LBO investment, but I think around, 6 of them are similar to the ones we've seen on the previous slide. But anyways, we have to look at market outlooks or industry outlooks, how much growth potential they have. And next, the competitive position in the market. Of course, we want to see the competition and where the target stands within that competition. And next, we want to see the potential for profit increase, the potential for EBITDA increase or cash flow increase. And of course, this can be achieved only by having an attractive market outlook or having a competitive position in the market. Similarly, we also want stable cash flows for an attractive LBO target. This is slightly new because this is specific to an LBO. In an LBO, as you all know, we need stable cash flow for interest payments and for principal repayments. So usually LBO targets have characteristics that does not require excessive capital investments. And we also want companies with strong management. So this is related to potential for profit increase or potential for multiple increases, because skilled management sometimes just by itself can increase, expand multiples as well. So in many times when there's a leveraged buyout deal, private equities, they might directly employ management or apply a management buyout model where management can participate in the deal. So they would offer a portion of the equity, or sometimes they would make contracts where management will be paid when they achieve a certain EBITDA or stock price or something similar to that. We're looking for businesses with low risk, especially because higher leverage, well, it magnifies downside risk. So unlike just an ordinary investment, the downside risk is significant in a leveraged buyout model. So we want companies with low business risk, which is also very important. And this is also specific to leveraged buyouts. It's not always the case, but we do prefer companies that have sufficient collateral assets because they can be used to, raise debt, or just by the fact that we do have sufficient collateral can lead to better terms, maybe lower interest rates or a longer time period. And lastly, well, it's not specifically about the target, but we do favor a very good deal condition. So market conditions are very important. It's not just the target, the market condition. Upon entry, we want market conditions to be very uncompetitive, which will drive down our acquisition price, hopefully. Upon exit, we want deal conditions where it's very competitive, and we want a lot of investors to join the bid, which will drive up the acquisition price and eventually drive up our returns. And here are some of the most famous private equity firms in the world and their portfolio companies. See if these portfolio companies match these 8 characteristics of LBOs. Some companies will have all 8 characteristics. Some companies will have only 4 or 5, but generally they will carry many of these characteristics for a suitable leveraged buyout target.